All right, so I discovered this Twitter account. Basically, it's documenting saylor is what the handle is, or the handle is actually saylor docs, and it's documenting saylor. Just search it on Twitter, you'll find it, and it's a very good follow. That honestly, like I thought fairly highly of Michael Saylor, but once I started seeing some of these clips and stuff, it's like, man, this guy's just an absolute genius, like an absolute genius. I think that we're gonna look back, 20, 30, 40 years from now, and be comparing him to like the Buffetts of the world, and that could even be an understatement, to be honest. But we'll see how that goes. So I wanted to play this clip and then give my thoughts, and it's on market timing, and there's some interesting aspects to it which I'll get into after. So I'll play it and then I'll give my thoughts.
Like if you roll the clock back to 2007. Steve Jobs invents the iPhone. And, people thought, oh, it's a toy. By 2009, the iPhone's got an app store, and if you understood anything about software, the iOS is a new operating system, and it's going to be its own ecosystem, at least as important as the web. And it's going to spawn an entire new generation of applications, right? And the mobile wave is responsible for what, like $5 trillion? 5 to 10 trillion dollars of wealth over the next decade. Can you imagine someone sitting around saying, oh, I get mobile device technology, and you're trying to time the market in Apple stock in 2011? Like you're buying and selling Apple stock in 2011? You're like, you want to shake them, like, are you out of your mind? I'm trading Facebook stock back and forth between $8 a share and $4 a share and $12 a share. And you just want to do this, like, do you not understand that one day every single person on the planet is going to have one of these things in their pocket, and it's going to go up by a factor of 100, and you're trying to like trade Apple stock between $1.25 and $1.17 and bragging about how you bought it at $1.25 and sold it at $2.11? And have you figured out the consequences of being short the share if it goes up by $100? Like the amount that, like, are you out of your mind? Like, because, by the way, like, I spent 30 years in the business, and I obsess over this every single frickin' minute of the day, and I wrote a book on it, right? I wrote the book. I predicted the future. I made $500 million investing in these things, right? And I started, and I put a small amount of capital in. And let me tell you one thing, John. I can't time the market.
So that's the clip, and there's, like I said, there's a couple interesting aspects of it, but the main thing that he's getting at here, I literally just seen the clip, but I'm almost certain this is what he's getting at. What he's getting at is the people talking about, should you buy Bitcoin now or should you wait for a pullback or blah 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 blah, and the point is quite simple, that like you said, one day pretty much everybody is going to want to get their hands on Bitcoin. My base case is maybe 30, 40, 50% of the population, but that's besides the point. Whether it's 4 billion or 8 billion, that's still, you're still splitting hairs at the end of the day. You're talking about a upside of, I don't know, 20 million a coin versus 40 million a coin. Like, I'm just throwing numbers out, but you know what I mean. So that's exactly what I've said time and time again, that Bitcoin's going to millions of dollars, probably even tens of millions of dollars a coin at some point. And you have these people that are concerned, like, oh, it's up 3 or 4x this year. I'm going to wait for it to come down. And you're like, the likelihood of it going to 200K before it comes down 20, 30% is probably about the same. In fact, if I had my money on a 100% gain or a 30% pullback in Bitcoin, which one's going to happen first, I would bet on the 100% gain. And honestly, I don't even think it'd be close. Like, you'd probably have to get to maybe 15, I don't even know if 20, like you'd probably have to get to 15% pullback before I would bet on the pullback. So trying to time the market is stupid. Like, it's absolutely stupid. The best way to go about it, the data is very, very clear on this, that the best way to go about it is simply to dollar cost average. If you know you are buying such a amazingly incredible asset, you don't care. Like, assuming Bitcoin goes to again, we're assuming here, I'm just making a point. If it goes to $1 million a coin, nobody, like absolutely nobody, is going to care whether their average cost is 90,000 or 100,000 a coin. Like, nobody's going to care. Like, absolutely nobody. So why are people all hung up on trying to time the market? And I think that there's a couple of reasons for that. Number one, people are overly emotional. In fact, this is probably one of the most important characteristics of a successful investor, is that they're not emotional. Like, in fact, they probably have no emotions whatsoever. Like, people that are overly emotional, virtually guaranteed, are going to lose money when it comes to investing, because they don't understand risk, they don't understand timing, they don't understand capital allocation, they don't understand any of that stuff. All they care about is they buy it. It's up. I gotta buy more. I gotta mortgage the farm. And when it's down, it's like, I gotta sell, and you're panicking. And it's like, no, that's not how to do it. The best way. I'm not saying you shouldn't, like, personally, like when there's an extended pullback, usually I will buy a little extra. But my strategy, literally the entire time, and again, I don't have anything crazy, but the entire time has been simply to just dollar cost average, right? That's been the strategy the entire time. And when you look at Bitcoin, this people talk about how volatile Bitcoin is, which is true to some degree, but usually they do it in an attempt to kind of straw man it. If you look at Bitcoin, there is no at least I seen a post about this the other day. I didn't verify it myself, but I seen the graphs and stuff. It looked like it was legit. There is no 4-year period to where if you would have waited 4 years and been down. There isn't one period in Bitcoin's history. Is there another asset on the planet that you can say that about? I mean, gold was down for like 20 or 30 years at one point. Real estate, you had probably, I know you've had decade periods where real estate is, obviously going into 2008, I'm sure that happened. Stocks, you've had like 20-year periods, for sure 10-year periods, even within this generation. Going back to like the peak of the tech bubble, going into like 2010, I think it was around then, roughly, that you've seen new highs. So this idea that Bitcoin is overly risky, like, what data are you going on? And the data that people probably would refer to, it's volatile. But volatility and risk are not one and of the same. In fact, if anything, they're probably the opposite, unless you're talking about like penny stocks and stuff like that. But when you're talking about well-established assets, like when you look at the stock market, the NASDAQ gets better returns than the S&P, than the Dow, right? Like you look at Toronto or Vancouver real estate, or San Francisco real estate. It's more volatile than flyover country real estate, but it's done better. So this is also one of the biggest mistakes that even professionals, because I've talked about people that are literally financial advisors, they're managing millions of dollars, and they say, Bitcoin is risky because it's volatile. And it's like, no, it isn't. That's not a fair point, right? Anyone trying to say that because something's volatile, it's risky and it's a bad investment, I would go even one step further. Those people should not be trusted. I don't care how many economics or degrees you have, how much money you're managing. Like that just does not make sense. In fact, like I mentioned, if anything, the opposite is true. So, like I mentioned earlier, there, I think Michael Saylor is an absolute genius. I think that like I mentioned in a past video there, I think that MicroStrategy is going to be $1 trillion company. I would bet money on that for sure. And then it could even be the most valuable company in the stock market at one point, because they have almost 400,000 Bitcoin. Within a matter of this halving cycle, maybe the next halving cycle, it is going to be like it will literally be impossible for any other company to accumulate that much Bitcoin. Hell, like. It is going to be impossible for the vast majority of countries to accumulate that much. Like at 500,000 or at $1 million a coin, right? You're going to have to spend $1 trillion to get a million Bitcoin. To get a 500,000 Bitcoin, you'd have to spend 500 billion. Like, how many countries or corporations have $1 trillion just sitting around? Like, virtually none, right? So I think that what Michael Saylor is doing is just absolute genius. Like, obviously it is risky. I'm not saying that it doesn't come with risk, but my point earlier there was simply to point out that just because something is risky doesn't mean it's a bad investment. Just because something's volatile. Like, volatility, the fact that the first thing people hear when they hear the word volatility is not good, like you should avoid, it just goes to show just how amateur a lot of people are. Risk, yeah, that's something that to some degree should be avoided. But again, it all comes back to the cost-benefit analysis, right? Like, a very simple, exaggerated example here would be, if I told you that you have to do, you have a certain amount of money and you have to invest it in one of two ways. Option A, you have a 100% chance at a 5% return. Option B, you have a 50% chance at a 100% return. Anyone that understands basic math, basic odds and probability would say you should choose option B. And that's exactly what I'm talking about when it comes to MicroStrategy, when it comes to Bitcoin. I'm not saying that there's a guarantee. I'm just saying the risk reward, that if what we think happens, like, you're going to do so well it's not even funny. Like, if Bitcoin was at $500,000 today, I'd be like, okay, maybe I wouldn't be so bullish. Like, $1 million. Like, to be quite honest, like, for someone to get the amount of Bitcoin I have from me today, if they'd have to offer me over $1 million. Now, I don't have a full Bitcoin, but dollar for dollar, that's what you'd have to offer. And there's the most people that are in it, that's what they're saying. So that's what I wanted to bring up there. But again, when it comes to market timing, when it comes to stocks, when it comes to Bitcoin, if you think you have a winner, especially when it comes to something like Bitcoin, if you legitimately think that you discovered the next Apple, the next Microsoft, like the next Nvidia, and it's currently at a $100 billion or a $50 billion market cap, you would be absolutely and utterly insane not to buy as much as you possibly could today. Because if you think that it's a $1 trillion company and it's got a $100 billion market cap, you should be pouring as much money as you possibly can into it. And that's exactly, to tie it all together, when it comes to Bitcoin. I'm not saying that you take excess risk here. Do your own due diligence. But when it comes to Bitcoin, I think that it's an asset that's still going to 100x from here, within the next generation or two, not within the next 200 years or 100 years. Within the next 20, 30, 40 years, I think Bitcoin's going to be up 100 times. And given that, I think you'd be crazy not to be allocating at least 5 or 10%, probably more, but at least 5 or 10% of your investments towards that. Just my opinion. I'm going to leave it there. I've gone long enough here. If you liked the video, please like, comment, subscribe, all that good stuff. Let me know what you think, and stay tuned for more.